Hey guys, how's it going? Welcome back to the channel, and I just want to make a video here on some of the questions I've been getting regarding my monthly trading statistics. So recently I've been posting my monthly returns that was tracked from one of my trading accounts on Myfxbook, and this is a platform where you can track your trading statistics and some of your data that you do. What to be completely honest, I do not like to use this Myfxbook platform because they are not giving me any benefit for my trading data. And just want to sort of clarify this before getting to some details here with my monthly returns. Is when you're connecting an account to Myfxbook, they obviously see your trading numbers, they see your trading data, and pretty much whatever you do on your account, it's something that you hand over to them as a platform provider. And for that reason, I do not prefer using it, and my bigger accounts that I have, I do not connect it to Myfxbook because simply they are able to copy my trades and they do not share anything of it, because if someone's copying your trades or someone's making a profit from your trading skills and your trading data, at least you should be getting a payout or something. Like if you're trading with a company like QuantFunded and they are able to copy your trading data, then obviously you're getting a payout from it. So that's my perspective. As long as I'm giving my trading data to someone, at least I want to get a profit split from it for that benefit. So that's kind of the first thing I want to mention here regarding this Myfxbook platform. Is it's not something I use too much. I created an account at the beginning of the year, and I just wanted to make sure that I'm also able to put up a Myfxbook statistic out there to the public, which I'm of course able to do. And this is something that some people just want to see if you're legit, and most people see it as a good proof of statement if someone's a profitable trader. And obviously there are also various different ways to also manipulate the data. So it's end of the day not really the most reliable platform, and what rather tells if someone's actually profitable or not is, for example, calling the market on a daily basis. Like, I do live trading sessions every single day with my one-on-one students, and that's what trading skill is. Like, if you go to the market every day and you're able to determine the market direction on a daily basis, or you're literally able to see what the market does, and it is proven, it is recorded, and it is seen in live as it happens that you're doing the things that you're supposed to do. To me, that's a bigger proof that someone has a clean trading skill. But despite, I still gotta respect that some people do want to see that verified statement of Myfxbook, for example. So for that purpose, I made this account and I've been trading on it from the beginning of the year, and just trading regularly, nothing too extra on it. Like, I wasn't risking anything more than I should have been risking. I was just making sure to follow my plan according to the way I should be following it. And most of the trades that I took on this account was even trades that I even shown in my live trading sessions, for example. So that being said, when I posted this screenshot, and this is not just a screenshot, it's obviously here on the website, and the website is right here. I can walk you through all of this. Like, this is not just an edited screenshot. We can go through all of this month. This is all live, it's all track recorded, it's all verified. Regarding this, I've been getting some questions of, if you guys see 7 months of profitability here, why is it that there has been one single month here of February that has been a negative 8% month. And, this is actually a great question, and definitely the amount of people who've been asking me this, that why is it that if someone's so consistent, a negative month here can slip in? And that's actually an excellent question. Like, that's definitely what you should be asking, and also what I should be asking myself as a full-time trader is why is it that something like this could be happening? And, really the truth to it is when you're trading, you're looking to follow a trading system according to a trading plan, which is technically a system of logic that is required to be repeated over and over again as a speculative format, but of course a speculative format used with proper risk management. So that being said, in that particular month of February, I can absolutely tell you this very upfront and honest that in this particular month I did take a couple of trades, which in particular it was a couple of bad trades, and after that I had to deal with some different other stuff which obviously is irrelevant, but obviously this was a month I personally was sort of half-assing because I was just focusing on other things, like other personal things in my life, so on and so forth. So that to me is once again just an absolute proof that if I want to trade profitably, and also if anybody wants to trade profitably, one of the most important aspects to profitable trading is not only just having a consistent trading plan or a winning trading system, you also have to fully focus on it, and you just cannot be half-assing trading. Like, there's no way of just not giving a shit about it. Like the image that you see sometimes from influencers that 90% of their day is about driving supercars and just laying on a beach is obviously not the trading lifestyle that actually happens on a daily basis. What the trading lifestyle is and what a systematic, consistent trader does is you show up to the market every single day, obviously in a suit. Like, you're not just trading in your pajamas, you're not just trading in slippers or whatever it is. You gotta show up every single day in a suit properly as you would be going in an office. Like, that's what I do every day. And that's also done to not half-ass my trading system, to get my mindset in there and to make sure I'm doing the right things I'm supposed to be doing. So, that being said, that's my main message in here. If you want to be consistent, you got to do the things you're supposed to do. And, I've seen countless traders who know how to trade. Like, various traders do have the skills and understanding of how the market actually works. Like, absolutely, a lot of traders have the right skills and market knowledge. However, the part where a lot of traders are going to be failing is, of course, when it actually comes to executing those things in the real world market. Like, can you actually make sure to risk 1% every single trade? Or can you actually close the trade when you're supposed to close the trade every time? Can you make sure to follow the plan and not just trying to gamble whatever 10x or 100x profits you want to make on one single trade? So that does go a long way because, throughout my career and throughout also mentoring others, most of the time when I seen someone fail and someone being inconsistent, it has only happened for one reason, and that is like literally just not doing the things they're supposed to do. Like, I seen traders who've been consistent and suddenly they just mess things up because they do not focus on it properly. When they see a setup, they do not complete a full analysis on it. They just jump into the trade right away. So that's what half-assing is. Like, half-assing trading is when you're just gambling around cluelessly. But of course, if you want to be consistent, you gotta very strictly follow the things you gotta do. So these are some comments on psychology, of course, but end of the day, this is also why this negative 8% month is seen here in my statement. And, this is the reality of it. Like, that happened. There's nothing to hide here. The month has been concluded. The profit has been made. The loss has been made. But, that's not the big deal here. Like, the only big deal is, are you consistent long term? And of course, I am consistent long term. I am proven to be consistent long term. Just the main thing is regarding one negative month here. It is also very important to make sure that just because, for example, you have a negative month, you're not breaking on a psychological side. Like, I know one of the biggest weaknesses for many traders is when they are winning, they get confident, but when they are losing, they just kind of lose the confidence and just completely turn things head to toe, and they just absolutely start messing things up because they had a couple losses. Like, for me, this negative month, like, it didn't really affect anything either in my psychology, because I do know in a long-term perspective, my system is going to be profitable. And, that also goes into every single trade. Like, if you take a stop loss trade, but you do not know that your system is actually winning, like, of course, it is understandable you might be falling backwards in the confidence side just because you take a stop loss. But, like, if you actually know that from 1,000 different trades, you're gonna be ending up profitably, what the hell does one single stop loss trade matter for you? So, these are the little things. But of course, here in terms of a trading statement, for me, it's not the unprofitableness of the system itself. It is really just a month where I just wasn't able to fully focus on it. And that's also something I recommend everybody to look into their own trading system, because, one of the main things that might be holding you back is really just not doing the things you're supposed to do. So, let's also take a look at some other metrics here. So, very good month here. So that was negative. Also, I traded a couple fewer pairs. Still gold is the most popular one. So if you look at my trading, gold is actually the most profitable one out of all of them. After that, in March, it has only been gold, which was also a smaller percentage. Wasn't trading too much there. In April, gold and GBP/USD. In May, again, gold and USD CAD. Again, gold staying kind of the most popular one. In June, gold and Euro USD. And July, gold and GBP/USD. So, yeah, in the beginning of the year, I did have a very aggressive start to it because I did want to make sure this account is having a good start. So for that reason, I did also focus on different pairs and, just making sure I'm capitalizing the most of it. But as you see, later down the line, it did get more into popularizing gold only, because, if something's consistent, you do not really have to shift away from it. And gold is mostly one of the most active pairs. Like, before Trump was in office, a lot of different pairs were traded by me. But as Trump got into office, from end of February and beginning of March, that's when I also focus more on gold. Because when you trade, one other important thing is you gotta make sure to follow the pair that is actually active. Like, why is it that in our recent meeting we've been speaking of gold? Well, obviously we've been speaking of gold in one of our recent meetings because gold is going to be relevant in these upcoming times. We obviously had this news event here, India finding 20 tons of gold. Even though this news event might not be actually real, that doesn't matter. The only thing that matters is this is going to be driving the market aggressively, which will mean more gold in the market, also means lower prices because there's more demand than supply. And, I could also say the other thing that we spoke about yesterday, the peace agreement, if the peace agreement goes successfully, which, is kind of in an in-between phase right now. Like, we cannot exactly know what's going to be the outcome, but most likely it is going to be a peace agreement. So that being said, like, such trade here in a bearish market is already expected to go lower. So only because of an event here, or maybe the event of the peace agreement for Ukraine and Trump, that is also leading gold lower, for example. So why am I saying this? Because in this current situation right now, like, this event and the other event of the peace agreement, it would be making gold more active, and the activity and the liquidity of this pair would be much higher. So for that reason, I would also much more focus on gold, of course. Like, that's just a simple thing. Like, if you want to trade something that is the most active as possible and has the most opportunities, you gotta be focusing on something that is actually popular at that given moment, which in this case it will be gold, of course. So yeah, guys, that's the stats so far. Very consistent, of course. With this current rate of growth, it kind of looks like for the, in the next 10 years, with this current growth, we would have a million, but I'm not sure how accurate this is. If you average the returns, it's roughly 16% every month, and with this average here, roughly 16% every month, is about 500% a year, which, in reality, 16% every month is somewhere around 475% a year. And, if I just continue that close to 500% a year, according to my average 16% a month return. I'm speaking of average because the average is coming out of a average data, because yes, this month was terrific. This one also absolutely unbelievable. But with this one, some small amounts, this also a bit of small amount. The average is, of course, 16%. So that being said, let's say if I just continue doing the things I'm doing, in the next 10 years, 100k up at close to 5 million, which is absolutely amazing. Yeah, some pretty good times ahead of us. Let's see this. Alright, guys. Thanks for tuning in, and good luck in the markets.